Yeah, all right. So, Lucky Deal, welcome. Hey, Ninja MJ, welcome. I see many of you guys. Welcome. This session is going to be recorded. Usually, the late sessions are not, but this is going to be a dedicated class. Of course, that we're going to be taking a look at some of the things that Daga DT requested to. So, we're going to be talking about today on my layering system. If you don't know what my layering system is, don't worry, I'm going to be explaining it in full. Also, the main purpose of this session is going to be going over every single layer that I have and explaining you why I have what I have and how I use it and what makes sense for me in the way that I combined it. All right. So, all right, everything might look very cryptic to you, but let me get started here. Let me share my screen and let's roll with that. All right, perfect. Let me know, guys, when you are able to watch my screen. Perfect. Seems like it is rolling, right? So, all right, the first thing that we're going to be going on, and we're going to be using just regular Bitcoin. It's going to be the indicators that I use and how do I interlock them. All right, so let's go with BTC USDT, and then let's use one that I might not have on my radar. I think let's just go for this one. Why not? Right then, let's just go to full screen. And finally, you'll see that to my left, I have just a bunch of indicators, all right? Let me just minimize this one. And the first thing that I want to show you, it is the way that I got it configured, all right? So as you can see right here, the bare minimum, that's what we're looking at, right? That's gonna be my first layer. Something that you need to be aware of, and for some reason we don't have, oh yeah, I know why. We don't have that enough history. That is because it's just these weekly futures. Let me just bring up one that does have it's not just futures. BTC USD, and I think this one, will this one work? All right, perfect. Do I have anything important? All right, not really. Just a couple of calls in there. All right, this will make it. All right, so basically, I usually use the one that is not the indexed one. My main overview on on Bitcoin is gonna be this one by either Binance or Bitstamp because those are the ones that I believe they have the most history. Usually, I get started with Bitstamp, all right? So, and then I use the one. So I do my analysis on Bitstamp, and then I do the one from the broker that I'm going to be trading on. All right, just so you're tracking. At this point, I just want something with nothing on it, right? Then my first layer, it is going to be just a set of indicators, right? And then I'm going to be adding layer by layer by layer by layer more complexity. That doesn't mean that I'm going to add as much complexity as I can. It only means that I'm going to be using the tools that I like in one with accordance to another one so I can overlay them, all right? So if you take a look at, for example, Market Dynamics Pro, all right? Market Dynamics Pro has order blocks, has a market structure, inner and outer, that's three, fair value gaps, imbalance volume profile, money flow POC. We have VWAP, liquidity zone. We have premium discount zones. Just there, we have 10, right? Then predictive ranges, 11 trend lines, support and resistance, multi-time frame support and resistance, so we can add more than one, right? High and lows for weekly and daily, channels, triangles. I mean, come on, we have just a bunch of indicators in here, right? From all of this, also we have sessions, by the way. So from all of this, I might want to use some of them, right? And in certain coherence, right? This coherence doesn't really mean that you need to understand the way that I use it. It only means that may need to make sense for you, all right? So for example, what would something coherent will be for myself? And let's just do this market oracle Pro Plus, right? Or you know what, the market dynamics, this one here. All right, so for example, one of the things that I usually go for, it is I like to have a predictive indicator with a reactive indicator, right? And why is that? Reactive, and since I already have a couple of things, it is like a trend line or a support and resistance. Like, for example, this support, right? So we see the market breaks out, right? We don't know that this support is there until we already have seen it bounce here once, bounce here twice, and maybe the third time. Well, oh, that's why we said, hey, you know what? There is a support in here or resistance, whatever. It's actually the same, all right? There's just a line, a reaction line in there, all right? So we draw it. In the future, right, we are looking at the same exact area regardless. Does that make sense? So we took past data, and then we are, without no modification, all right, without no other further calculations, without nothing else, we're just looking at the same area over and over and over. All right, so this is a reactive indicator. Why? Because based on past data, we're gonna be looking for a reaction up in the future without modifying that data. All right. Then we have predictive data. Just like when you're trying to guess the numbers of I don't know, of a lottery ticket, right? So you look at the past data, but you don't just use the same numbers that have called out in the past. No, no, no. You look for, all right, what numbers, right? What areas, what volatility is being used in the past, and what are the most numbers, like, I don't know, channel one. Let's just say that we just have four slots for the number, just to make this simple, right? So let's just say that what are the numbers most likely to appear in the first bowl, right? I don't know, 1, 3, and 4, all right? And then here, 2, 6, and 5, right? And here, I don't know, 3, whatever, 0 and 7, 9, 8, and I don't know, 4, right? So there you go. So your most possible number would be 1, 2, 3, and 9. That is by looked at the different times that we have set, all right? But we also have these other probabilities, right? So what do? We usually do a matrix, right, of different probabilities to start calculating more chances, all right? So that give us usually a statistic, give us in between, right? In between 9 or 1 and 4, right? We have the most probable numbers, right? So for example, when we talked about a predictive indicator, we are using previous math and then analyzing that mathematics, all right? So for example, right, we already have the zone, right? But what was the forces that acted in here? All right, volume, maybe spike of volume, all right? With an increasive volume, right? All right, so next time that I see an area that is dropping, maybe an area up ahead in the future that is dropping, and then I see volume going up, oh, I know that I could be looking for another area from high volatility, right? And add a line in there. You see? So I'm using mathematics with past data to predict not existing data. Does that make sense? All right. So that is one of the points that I usually do. Another grouping that I do, it is horizontals plus not verticals, but tilted lines. I don't know how to translate that, but tilted, right? So I want something like a hashtag, like a little bit of a hashtag. I'm going to explain that in a bit. But for example, in here, and I'm going to explain it right now. Why not? I have a trend line, all right? So usually for me, my most important trades are based on trend line breakouts, all right? So breakout, all right, retest, and then off we go. So by the way, look at what we're talking about today, all right? So whatever. The point in here, it is that at this point, we're going to be having a breakout retest. But wait, maybe I have a set of support and resistances, all right? All right, so what kind of support? Oh, there is a resistance in here. What else do I have? I know maybe something here. I know maybe another one in there, right? And maybe another one somewhere around here. All right. So now I also can see a channel in here with based on previous price action, right? When I have a little bit of a gap or pause in the market, right? Now I can define not only an inner channel, but also an outer channel. So what should I be doing? Looking for this entry point. So, hey, instead of breaking out, well, I could be opening now a short in here and ride it all the way here, take my profits, and then rinse and repeat, rinse and repeat. So based on a trend line, right, which is not perpendicular, but is tilted, and then horizontal data, that's why I confirm, or that's what I build a grid system to know where I should be bouncing from areas. All right, so that's another logic that I use in here. Another logic that I use, it is horizontal, so support resistances, all right, sorry, horizontal whatever, horizontal data plus VPVR plus volume down here and volume up there. Why? Because whenever I see a spike of volume and then maybe I have this support, well, then I could be saying, hey, this is a spike of volume that tells me, oh, maybe the limit, right? And this other support zone, well, then also give me a set of entry points, all right? So what other things I use? Well, not only support and resistances, I also want to use something that is kind of like a right now allocation, right? So how is it a money allocation? Or, well, that's why I use order blocks, right? So what are the order blocks? They are basically on now, right now. This is not predictive math, by the way. Not predictive math, is reactive math, all right? But taking into consideration where are the orders being allocated on these areas and how strong is that money allocation. That gives me a perspective of where I could be maybe bouncing, right? Going to maybe an order block in here. And then if that order block is big enough to send me all the way down here, or is it thin enough or weak enough just to get me somewhere around here from the bounce. And then if I already have an existing support, well, then I can predict magnetic reaction from an order block to then go bounce on an existing support. And then because we already have weakened that order block, breakthrough with a little range, breakthrough, and off we go. This is how I can predict, or not predict, but estimate breakout, retest, all right? Going upwards with a little pause, going upward with a little pause, right? And then continuation, and then continuation. Why? Because we had an order block in here. So we bounced from the order block. It wasn't that strong of an order block. We came back to this support zone, right? We bounced from the support. We took whatever was left of that liquidity and then continuation. You see how that thing started working? All right. Now that we have defined what kind of logic I use, let me show you what settings I have, all right? The first one, it is time frame dependent, all right? Why? Because I am the most profitable in the 4 hours, right? I'm here to make money, not to play around, not to mess around, right? So I'm usually, well, I do also play around and mess around, right? Don't get me wrong. That's also part of the game, right? To have fun with this. But the point is, when I'm seriously trading on, when I want to look at something that I just needed a glance, I need to go and look at my most profitable time frame, all right? In this case, it's going to be the 4 hour. Why is it going to be in the 4 hour? Because period. I'm just good at the 4 hours, right? That's what I'm the best at for myself, all right? So if I go to the 5 minutes, the 30 minutes, the 1 hour, the 4 hour, and the daily, where I make the most amount of money, it's going to be 4 hours, all right? So that's it. Depending on that 4 hour and what asset I'm using, I get my number in here, my trendy number, all right? Why is it trendy? Because the trend is your friend. All right. So I usually look for trends. In fact, remember I told you the first, all right, at the beginning, my most profitable traders, my strongest trading strategy, it is based on trend lines. All right. So what if I could have something better than a trend line? Well, that's why we have our dynamic reactor, our trend line and our dynamic reactor. Why? Usually a trend depends on the volume. All right. Usually when we have a lot of volumes or a volume spike above us, usually we break downwards, right? But we also see when we add the volume indicator, let's just add it so you can see it. There you go, plain old volume, all right? We can see that this is just not a straight up line, right? We can see that we go up, we go down, we go up, down, up, right? Down, up, down, whatever, right? This thing, right? So there's actually some spike zones, you see, like a pulse in here, right? And then what are we seeing, right? The same upwards movement in there that we had explained before, all right? So what happens with this kind of volume? Well, then I can maybe add something that defines an average something with that, all right? What if I do the same thing here, right? And whatever, then I add an average something, right? Or a smoothing factor, just so you know. So I'm just not something, right? A smoothing factor onto the hardness or to the sharpness on that volume to make it a little bit more flattish, right? More easy to understand the waves ups and wave down. Right? Look at that, a wave up, wave down, wave up, wave down, wave up, wave down, wave up. All right, so now that I have maybe those smoothing factors, well then I don't actually need to see just a spike of volume, right? I just need to look for a spike of volume and act it as a support resistance. No, I can actually make a grid, all right? What kind of grid? A candle by candle grid, all right? So where is the most amount of volume in where the price action it is right now, like at this point, all right? Oh, well, right now, based on the horizontal and vertical volume, well, then I can maybe see that the most important area of volume is right there. And then if I do it for the next one, 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 all right? And then I'll see that I have something like an EMA, all right? So if it's represented as an EMA, everybody knows how to use an EMA. So just so you know, that's why the dynamic reactor is not an EMA, it's not a VWAP, it is a volume allocation area, all right? Let me just clear this up. So when I turn this on, the first thing I want to see, it is the volume. Why? Because volume is tightly related to my trendy, right? So if you want to know how I get my trendy, easy peasy, I just look at manually areas that for me, and I zoom out as much as I can, all right? And see, this is an uptrend, this is a range, this is a downtrend, and it's natural that you overlap, all right? Remember, the trend, the downtrend, this downtrend did not started here. Absolutely not. The downtrend started where? When we lost the previous trend, and if the previous trend was a range, the actual downtrend started here or here at the breakout or at your confirmation rejection. That's it. Your downtrend is not here. Your downtrend is when you lose your trend, all right? The same with an uptrend or a what? A bullish trend. When is this bearish trend ending? This is not the end of the bearish trend. This is not the end of the bearish trend, all right? And many newbies kind of like go, hey, yeah, right there. No, this is not. Where is it? At this point, looks to be right here. So are we bullish? Not per se, but this is the end of the bearish trend. How can we know? We need to have a breakout, retest, create the opposite of a bearish trend. A bearish trend is lower highs and lower lows. So we need a low, a higher high, and then a higher low. And when we bounce from here, that's our confirmation. Just like in here, we created a lower low from ranging, then a lower high from ranging, And this is our confirmation as we bounce from it. Then what? We just put down a lower high, lower low, lower high, lower low. Does that make sense? So based on that, the volume usually dictates where am I going to be a bounce through or a breakthrough. So if the volume defines the trend, it's a very nice tool to use as a trend indicator. That's why I use dynamic reactor and also trendy in the same zone. So in this case, I'm just trying to maximize my chances to understand the trend, both mathematically speaking and volumetrically speaking, if that makes sense. All right, so I'm gonna be turning it on, and this is what we got. We got my trendy giving me green and red candles, and I have my dynamic reactor giving me breakthrough retest. Look at that, acting as a beautiful EMA. And the importance in this is not an average of candles like EMAs. This is an average of important volume area per candle. All right. So at a given moment, like right now, at this second, the area, the most important volume area, it is right here, based on horizontal spikes and vertical spikes on this time, on this candle, right? So if I go downwards, I'm usually going to be assuming that I'm going to be bouncing from that volume area, all right? So that's why I'm looking at a volumetric and geometrical trend allocation. So that's my layer number one. All right. On to my layer number one, I also do some other kind of like cheat sheets. All right. So another cheats. What kind of cheats do I do? First, I don't like this the thing here that says buy or sell, and then the other one that says buy. All right. I don't like it. I still want to know when they happen, but I just don't like it. Right. They just get in the way of looking at the charts. So what I do is I turn on G mode, gut mode. All right. If I turn it off, you'll see that my my signals, there we go, start appearing. All right. We don't have just yet a buy signal. By the way, when we have a buy signal here, let's rock on, because most likely we're gonna have a mini bullish structure there, all right, or mini bullish run. But so far we don't have a buy signal. All right. I still want to kind of like know where it breaks, bullish or bearish, but I don't want those signals. So I turn on God mode. Then how do I see them? By the candle color. How do I see the candle color? By candle highlights. And then I just do trend static, which means whenever I have a signal changed, it's change of color. Black and white, red and green, right? No colors in between. So that's how I use it, this first layer, right? The other cheat that I use is my taking profits. So what I do, it is going here, add my take profits, max profits, and also my prophecy max profits. Why? I have found out that I can use them as reversals, all right? Look at that, as reversals. So it's an added value. I'm not using it as they are intended to be used, but I'm using them my own way, all right? Feel free to experiment. The next layer, let's take a look at the next layer. The next layer is just all my reactors, all right? In this next layer, there's something else that is important, which is, look at that, I have a trendy number one. I don't care about that number. Why? Because I'm using here autopilot, right? When I'm using autopilot, whatever I put in here, it doesn't matter. Let's just put 100. And did I change anything? Let's just wait for that little eye. And stop moving right now. Did I change anything? No, did not, because when I use autopilot, I'm ignoring this trendy, all right? And I'm using a backtester built in to give me right now at this moment, at that moment, let me show it to you, a dashboard optimum tuning. All right, so if you were wondering, your optimum tuning, it is calculated, all right? It is calculated based on a backtester. That's why you're gonna be seeing it changing. All right. So this, when you have a better tuning, well, then this is gonna be changing, and when it changes, it's gonna change the signals in the past. So just be careful when you're using autopilot, because it's gonna be moving your trendy up and down. Remember, you cannot do it manually. It's gonna be doing it automatically. All right. Why do I want that? And then why did I turn off candle highlights? Because I'm not interested in actually having the trend mode being calculated by a back tester. I already have my method. All right. But what I do want is the side calculations, which is max profits. Max profits still being calculated based on my, autopilot, which means my reversals on max profits are gonna be spot on based on right now price action. So look at that, spot on, spot on, spot on, spot on, right? So as you can see, I'm using this system not only to see my dynamic reactor EMA like, right? Also this is a new one. This is a, quantum reactor, all right? My quantum reactor to give me better, more long-lasting trends. And then also using my autopilot to calculate my max profits, which I use differently, which I use as a reversal signal, all right? So that's the next layer that I use. So both of them are based on direction or the trend. Now let's take a look at my Market Dynamics Pro. This Market Dynamics Pro has a couple of settings. First things first, right? Remember I told you, I usually add up to 3 indicators, or I might venture, sorry, mosquitoes just biting me, man. Sorry about that. All right, so in this cases, I'm using up to, or I suggest use up to 3 indicators per layer. All right, so you'll see that right here I have this, which is liquidity zones. All right, this is a reactive indicator. I have support and resistance, which is also a reactive indicator. I have trend lines, right? Since trend lines I have limited to just one, I'm kind of like not counting it that much as another addition, right? This is also a reactive indicator. And lastly, I have previous weekly high and lows, another reactive indicators. You'll see that here I have 1, 2, 3, 4 indicators in one layer, right? My rule of thumb is 3. But if you're using, for example, trend lines and you don't abuse of it, well, then that really doesn't add to the cloudiness on your on your screen. All right. So as long as you can read easily, right, what is on your screen, go for it. Why? Because you're gonna be adding another layer. I don't know if you ever took drawing on high school and you use that semi-transparent sheets. Right, so you do a drawing and then you overlay another semi-transparent sheet. Then you draw another thing. So the conjunction give you other notations, details, or any other thing onto the main drawing. Right, the same thing we're gonna be doing. So right here, I already have kind of like my bunker for support and resistances. All right, one of my favorite things are this one's in here. Why? Usually they call for very nice rejection points, right? So rejections point that has played out in the past and most likely they're going to play it out in the future. So right here, look at that. As I explained today in the morning, that based on our oscillator, we also have the chance to do a sweep of the highs. And if I get in here, well, then this could be as before an area for rejection. You see that? To where? To my next support, maybe slowing down in here. So I have my next entry for a long in here. And if we get that, we're finally going to be having a higher low. All right. As you can see, there's multiple things happening in my brain with simple indicators as this was, but very powerful. All right. So let me jump into the settings here. The only settings that I've changed, it is the, support and resistances. All right. In here, my support and resistances, of course, are green and red. and they are proximity, all right? I also have turned off ranking data. So proximity, they calculate my support and resistances heliocentrically, which means starting here, what's the first one here, what's the first one above, what's the next one below, what's the next one above, and go on and so forth, all right? So it started from the center, from the price action, then calculate its way around it, all right? Why? Because sometimes we're not gonna have any meaningful supports, but I still want to see a support in the way to see if that pairs with something else, all right? So before I used to not use proximity, and then if I just remove proximity, and I'm gonna be adding ranking data just so you see the difference. Let's just wait for this to load. There we go. You see how there is no supports in here? There's no resistances. There's nothing. And then afterwards, sorry, I have a bunch of support and resistances. So now at this point, yes, I know this is the number one dashed most important resistance, but so far, I'm so far away from it, right? I don't really care about that one. I rather care about the immediate area of support and resistances, right? So therefore, in here, I'm adding the proximity. So I can calculate the next support. Look at that, the next support is in here. It makes a lot of sense based on this range that we bounce, you see? So it makes sense for me to have a support. So that's my first customization here. Oh, sorry. I need to change this back to where it was, which is, here we go. No ranking data and proximity. That's it. I have it on charts and midterm. That's the rest of it all is just the way it is, all right? Next layer. The next layer, you see very spread out, far apart support and resistances, and they're actually different in a different color. If I double click in here, you'll see that I have support, resistances, and a triangle, all right? As you can see, I only have 2 of them. So I can play around and even maybe add something else. Let's see what I have in here. I have, let's see, maybe, should I be adding enable fair value gaps? Not really, I don't really interested in that on this area. Volume profile could be a good addition, by the way, could be a great addition. Money flow POC, not really. Money levels, data levels, could be money levels, but we'll just ignore it for now. Liquidity analysis, liquidity zones, all right, we have it on another one, so maybe not. Premium discount zones, oh, this one is a good one, all right. All right, I can maybe add it. Then support and resistances, this is my next change, all right. I have support and resistances. I don't use the ranking data because I already know the dash line is the number one, the most important. But I did change the colors of my support and my resistances. Another thing that I changed, it is my time frame, 12 hours. Since I trade on the 4 hours, my next most important time frame is gonna be the 12 hours, all right? Which means regardless where I am, I can move to the 5 minutes. In this layer, I have just the 12 hours. I can go to the 1 minute, and then I still be plotting in this time, in this layer, the 12 hours, right? That will not be changing because this is a fixed time frame, all right? Levels counts 5, so 5 the most important ones. Local mode, in the other one was midterm, in this one is local. Why? Because on 12 hours, I want the tightest one, so in the 4 hours, they're not so far away apart, right? So that's why. And that will be basically it. What else maybe I can do in here? Highs and lows? Not really. Why not? Because usually this layer, I use it with this other layer in here. So as you can see, I can turn on and off the lower layer, right? So I usually do this to see where are my immediate support and resistances, and then my killer support and resistances, right? So for example, the next one is all the way in here, but I also have this support, this previous weekly low. So what I'm going to be worrying about, only if I if I start breaking this one, I'm going to be starting to worry about this zone to then bounce, and because we're going to be creating a lower high then creating maybe a lower low on money flow POC in my next report. You see how am I using them one on top to another? And then when they get my brain gets overloaded, I just turn it off, but I already have my drawing. So I can turn everything else out, right? And say, hey, now this thing makes sense, right? You see that? All right, so that is for my next layer, this one. In this area, I've changed my methodology because I've been doing the lower time frames, but I usually run, let me show it to you, triangles, right, on medium or big, all right? And there we go. It's going to be giving me areas of symmetry, right, or symmetry areas. I use those boundaries to add or subtract entry points, right? So for example, I have an equilibrium point in here, equilibrium, and a line that I'm going to be using as support. So if I come back down here, I could be ranging or doing something like that, just like I did on the equilibrium zone, right? And maybe I could be just doing an inverted head and shoulders, right, with my neckline being here, and then off we go to Valhalla, right? So as you can see, this enables me to forget about support and resistances, to focus only on this layer, and then if I need more information, turn on the other support and resistances, right? Plus a trend line. So this way, for example, you see, just so you know, I was not aware, I'm gonna be bringing this up tomorrow in the class. I was not aware that we were forming a possible inverted head and shoulders. But now that I've turned on my symbols or my symmetry analysis, right? And then I have a clean picture in here, all right? And then I know that I have my drawing here, so I'm not gonna be forgetting about my previous analysis. My brain can focus on forgetting everything else and seeing what is there, what is out there hiding in here, right? So there's a double purpose for those layers. First, give me as much information as I can, but also give me freedom from too many things to my brain be able to speculate ahead, all right? Let's take a look at the next layer here. This layer, and this I do a little bit of a tuning in this zone. I have just big areas of big supports and big resistances, all right? It's not support and resistance, but just bouncing zones, all right? This is, all right, are we overextended? All right, so where am I going to be having just a blow off top, or sorry, a big double bottom, a big double top, or something like I can really profit from? All right, so if you see, I have liquidity zones. Why? Look at that liquidity zone in reaction. Look at that liquidity zone in reaction. Look at that liquidity zone in reaction. Look at this liquidity zone in reaction. All right, so I want those liquidity zones. What else? I am adding my volume profile. Let me show you the only thing that I do, and this is completely up to you, right? Let me just clear this up. Sometimes this gets too granular, that for me doesn't give me the thing that I'm looking for. Let me give you an example. If I would have liked just a volume profile, I use this one, where it's so tightly granular, right, that I can have the spikes. Remember the spikes that I was talking about here? All right, we can get them here or to my right. It doesn't matter, all right? But let's just even grab it from here all the way here. And then I can go, all right, I'm looking for the shelves, right? Or I'm looking for the valleys, right, to fail through. All right. But I'm not looking for this because I already have it and it's for free. So why would I be just adding it back without nothing else new to give me? Right? Well, we offer you something much better, which is, if you see there's something to your right, which is very similar to this one here, right? Look at where the spike is. My spike to my left, it is in here. Where is the spike to my right? Right? So this picture is almost the same as this picture. Why? So because right here to your right is just raw volume. This is also raw volume. So in a way, we have almost the same, but less granular, all right? But to my left in here, and this is where the actual gold is at for me. This is the disparity. So basically, buys minus sells, all right? So big disparity, all right, usually call for areas of ranging or volatility, all right? Low disparity usually aim for areas of big reactions. Why? Because let's just say that you need, I don't know, $10 million, all right? I'm just guessing, $10 million to move in 8% of the market, all right? Perfect. All right, if you have retail, I'm going to be adding, I don't know, 1,000, you 1,000, him 1,000, another guy 1,000, 1,000, thousands. But maybe I'm longing, maybe you're shorting, maybe the other guy is longing. So there's going to be more volume, right? But that's because we're going to be fighting we're going to be trying to collect that 8% of bullish volume versus fighting the rest of the other guys that are shorting it, right? So we don't need just the $10 million. We need the $10 million to move this thing 8% plus whatever is matched for the bears. If the bears put another $10 million, we would need $20 million to move the market to the upside, if that makes sense. That is why you see big volume in areas of ranging. And also you see big disparity very close to areas of big volume and areas of ranging. Why? Because that is what dump money is, which is also retail money, all right? Why? Because we cannot get all together into agreement and just move this damn thing all in the same place. That is the same reason why you can watch what I say. Then just go watch who the other one says, and then go watch which the other one also says, right? Because everybody's just looking at a different target, different scenario, different everything. So we're fighting each other, right? But if we, for example, if we are a industry, all right, let's just say that we are Michael Saylor. Michael Saylor, you know that Michael Saylor does have $10 million, all right? So he only needs the $10 million, right? The itty bitty $10 million, and he's gonna be putting low disparity. Why? Because he has to fight to no one. He just go ahead, and when he clicks buy, the damn thing moves, right? Why? Because he's putting the $10 million all at the same zone, at the same place, aiming in the same direction. Does that make sense? All right. Having said that, what we're going to be looking for in here is going to be low volume, low disparity. Low volume, low disparity in previous areas of big rejection. And to find them, I also have my liquidity zones, right? Look at usually these liquidity zones are very close to low disparity. This one here, right? Sometimes it's just not that, oh, look at that, yeah. Very close, all right? Very close, not exactly in the same zone, but very close, all right? So what I do, remember, this layer for me, it is pumps and dumps, all right? Big money entries, right? So I'm looking for low disparity zones, right? At very close to a previous liquidity zone, right? And that's it. And then I maybe could be adding a support and resistance on top of here. Oh, maybe I can see, look at that. Low disparity. All right, let's clean this up so you can see the same thing that I'm saying. Low disparity, not really a liquidity zone, but very close to it. All right, so maybe we can go for something like that. You see how am I stretching the price action to go there? All right, and then drop back down to where all of us are gonna be expecting to buy. Right, so smart money sell it, we buy it. All right. And then they dump it a little bit more, and then they buy it, and they keep running. Does that make sense? So they try to wreck us, but that's fine. That's just the law of the jungle, all right? And the market is a jungle, just in case you were not paying attention. So now what else? Now I can add my support and resistances. Does that make sense? And based on support and resistances, well, I have a resistance right here. Why should I be gonna have maybe a week above it? Did I have it before? Yes. So this is making sense, all right? Maybe when do I have an invalidation? at the breakout of the money flow POC to low disparity to bounce off a support area, right, for my plan B. You see that? All right, so that's how I use this one. In this case, I just have 3 tools or 4 tools, which is money flow POC, ranging, oh man, sorry, something distracted me. Liquidity zones, all right, there's 2. BPVR, there's 3. Trend lines, there's 4, right, and that's it. That's what I got. All right, then the next one here. Predictive ranges, which now we're talking about predictive math, all right? Predictive ranges and order blocks. At this point, I'm usually looking for order blocks to match predictive ranges. Why? Because predictive ranges, they're based on, not speculation, but different math, which is a predictive math. Give me one sec. I just was reading. Buck, let me answer you after the class. But yeah, we source, we requested, and then based on the traveling distance, that's how we got the price. But I need your price, and I'll also share you my price because I think the price of the product is the same, but the shipment is different. I'll let you know after the class. All right, getting back to this. This is what I want to see: order blocks and the disparity between order blocks, and also the predictive math. All right, from previous or past zones. Just bear in mind that in this case we have a purple line. When the purple line is hit, usually we have a big rejection. All right, and then on that, what was that? Oh, nice! Look at that. Killing it today. Perfect. That looks amazing. Short 30x plus 50%. That is amazing, brother. Love it. All right. So in this case, I'm looking for predictive math versus money allocation, right? So am I going to be bouncing from the predicted zones? I don't know. They're predicting the zones that are most likely to bounce. And then I see the money allocation to say, yeah, I'm going to be bouncing from here. All right. So bouncing for this layer. Something important in this layer in particular, it is my predictive ranges, because I like to use 2 different predictive ranges. This one is just as it comes. Predictive ranges 15 charts. That's it, all right? No feel. And then order blocks as they are, right? The next one, you also see that I have now predictive ranges with liquidity zones. So as you can see, I'm trying to do the exact same thing, but with the liquidity zones, all right? So at this point, let me show you these predictive ranges versus the other predictive ranges. You see how they are overlapping? They're not the same at all. That is because in these predictive ranges, I'm using a bigger range. Let me show it to you here. Predictive range is 50. This is the same. And I only changed for it to calculate on the pivots from the 12 hours, all right? So why do I got that? In sometimes when predictive ranges give you big gaps, all right? And sometimes I might have a huge gap, but also if I just reanalyze lower or higher, I might have another, look at that, for example, not that big gap. You see that? So I could be doing this, because I break the first one, go for the second one, bounce from here, and then what could maybe I be adding? Support and resistances, right? Where was it? Right here. Oh, I do have money flow POC. Look at that. So it's getting messier. So I just start turning off layers, all right? So let's just wrap this one up in here. I use liquidity zones default, and then predictive ranges added 12 hours. The rest of it is default, all right? Also, I have added monthly highs and lows, and that's it, all right? Then I do have this layer, which is by its own because it is a standalone indicator. Volume profile bar magnifier order blocks by Jacob McAfee. This is the one indicator that I use as an order block indicator. This is an order block indicator, all right? That gives me the falling knife strategy, right? Or impossible targets. That's how I like to do it. I need to zoom out and start seeing where those huge blocks are being held. Remember, the order blocks are magnetic. So be careful because it really means, or it could be leading to something like 59, 58, 62. All right. How could we maybe do that? Having a dead cat bounce and then visit those lows, or breaking the range back and then going for those lows. All right. Why am I calling them impossible targets? Because those impossible targets, they actually get hit in the worst case scenario, right? And right now, we're not bullish. We're not bullish. All right. So just keep an eye on those. This is kind of like, all right, what is it out of my radar? This layer. What am I missing? What am I so desperately ignoring, right? Why is my subconscious trying to hide from me, right? I mean, my subconscious doesn't want Bitcoin to go downwards, right? But if it goes, hey, alert, this is your money allocation zone, all right? So I usually use this to add, I don't know, a big chunk of spot Bitcoin here that if for any reason I hit here, it's going to compensate whatever stopped out I'm going to be getting here. And then when I get here, this money is going to go to my retirement savings. All right. So that's how I do it. Let me just clear this up. And finally, liquidations. All right. There's another liquidations, but I like this one. Why? Because in this case, this is much more granular. And right here, this is what I want to see. All right. Not because I have some bullish or some longs that I can liquidate here means that I'm going to go up. That is the path of less resistance, right? Because if the market maker needs to manipulate this, remember, he can manipulate somewhere around 3 to 6 to 8%, all right? But he can still use that or manipulate it, right? So I'm going to be saying, all right, 8%. Is it worth it to be taking these guys? Maybe these guys, but we're not close enough, right? The price action would have need to be in here for me to say, all right, there is a greater chance for us to drop all the way down here. Why? Because the manipulation, it is just so juicy, right? To go grab these guys, which are brighter because there's more concentration of them, all right? It is just so juicy that whatever they can invest in here, they're going to recuperate it here with a lot more interest. And then when it bounces, they just, I mean, that's it. They just liquidate you, take your money, bounce, and then just sell it once again. And they just multiply 3 times their money with taking your money out. Does that make sense? All right. So in here, what is it faster? What is it better? I mean, do I have any bright points? Not really. But the bright spot, it is up here. So maybe I could be getting all the way up here and then retrace. Does this up here and then retrace make sense with the rest of the things that we've been adding to our layers? Remember that? Remember how we created that channel, the liquidity zone? Well, everything is falling into place. So remember, just do your analysis here, right? And then turn on your other layers. Oh, look at that, the top of the premium zone. Huh, right? What else? Oh, a liquidity zone. Oh, who would have guessed, right? There we go. Very close to a what? A predictive range. Oh, who would have guessed, right? And so on and so forth. And then just like that, you have your high confluence zone up there, all right? Then the rest of them, I just kind of use them for fun because I really like them. This is the Ghost trend crossing. You give me a trend line for losing the actual trend. Here I usually use it for my last stand entry, if that makes sense. And then I do request on this configuration, Market Dynamics Pro, and that's it. I also do request configurations right here on Market Oracle Pro Plus, so I don't mess up my own settings. And trend channels, I just turn it off to take a look at some trends that I might be, some channels that I might be missing out. All right. Other than that, that's the class for today, guys. Hopefully you have a full rundown on what I'm using and how is the logic behind each layer. Like for example, I could even add another market dynamics in here, right? Give me 1 second. All right. And why would I add another market dynamics? Maybe I could be using something else that I haven't not used, which is, and I'm being very eager to do it. You know what? Why not? Let's do it. Market. Oh, you cannot search here. So we're going to go invite only. Market Dynamics Pro, right? One with 1.9K. Let's just wait for it to load. Perfect. And in this case, I want to add, for example, I don't know, the one that I really want to add, market structure. I want swing structure in here, all right? And then I like these color candles, but let's just remove them because I still want to see. Oh, why not? Let's do it. Why not? All right. And then what would that make sense with market structure? Anyone? Maybe it wouldn't make sense some big support and resistances, right? Or some big trend lines. Good day, OC. I'm at work just here to listen. Absolutely, my friend. We're just wrapping it up, but thank you so much for joining. Really appreciate you guys. JR jumping in. Really like it, brother. Thanks. So let's go for maybe a trend line. Let's go for big, right? And let's just make them very bright. There we go. And then maybe we can do some high and lows, right? Or we can do some triangles and big or even micro, just in case I'm missing something. And enable pivots. Time frame, that will be it. I just click OK. And then I have a new setup. What is this setup telling me? Anyone is guessing? Anyone can guess? Why is this could be a new layer for me? All right. This is to show me market structure, all right? Based on first a big pattern. Look at this huge pattern. By the way, I was not aware of this. So great. Kudos for a chart from there. Right. So remember the gold is in the layer. So it's not about the breakout. It's about the retest. All right. Bouncing back up. Right. Failing to respect here. Do we still have the same structure? Well, where is it? Breakout structure. All right. So we should be going upwards in here. And then what do we have? Well, your mother's milk or the area where we could be finding the next what? Higher low. So if we hold this higher low, most likely we're going to be following the breakout structure. All right. Which is a continuation there. All right. So there you go. That's how you could be adding your indicators in here to create layers to tell you a different story. Each layer can tell you a story by itself, but also can be part of a bigger story, all right? How do you add it to a bigger story? Remember, you just need to add whatever other layer you want on top, right? And in this way, just to manage the cleanness and then not oversaturate your brain, all right? With that many things that could be just playing out in here with lights and colors and stuff, right? You want those lights and colors when they are porting and they're giving you value. When you get to a point where they're not, because I mean, even gold can be blinding, all right? There we go. So guys, give me your analysis, up or down. You have all the indicators on. Come on, should be easy, right? So you get the point. Not because you add just more stuff is gonna make things easier. You need a storyteller, right? You need to start looking into what the indicators are giving you. Remember, my rule of thumb is somewhere around 3 indicators per layer, so not to feel it cluttered. All right. Other than that, guys, thank you so much for joining. And remind please where this medium mother's milk is. Here it is. It is the, let me just go down here. The pivots, pivot points levels. And here is mother's milk, This is median something. We asked the developers and I went, hey, what does this thing? My guess is medium something, but we like to call it mother's milk. And he just went, just call it mother's milk. I love it. He never told us medium what, right? But I think this is just a medium measurement, medium something. But because the way that it works is showing you the median of the range of the pivots. right? It's not the median is not usually the center, but is the centroid, if that makes sense. So there it is, right there, guys. Other than that, that's what I got for you, my friends. Let me wrap it up because I do have another meeting right away. And yeah, and a class tonight. So hopefully I can see you guys in the class. And other than that, hopefully you guys have an amazing day. Thank you guys, and see you tomorrow.